Welcome back. Tech titans on Wall Street, and they are taking Wall Street. Amazon, Microsoft, and Netflix drove all the gains earlier this week. This morning, those stocks are looking higher, as you can see there. Amazon is king, accounting for 27% of the S&P 500's total gains this year, according to the Wall Street Journal. Front page story on this morning. Joining us now is the founder and CEO of United Capital, Joe Duran. Joe, great to see you. Thanks so much for joining us.
Great to be here.
Well, it's true. Technology, and it's just three names that the Journal article talks about this morning: Microsoft, Amazon, and Netflix taking all the gains. What does that tell you, that just three names is really the driver of an index that's supposed to be 500 stocks?
You know, Steve was mentioning this earlier, and I totally agree. We've seen this before. It seldom plays out well. You want to see everybody participating, not just the generals. The FANG names have really been driving everything for the last several years. And so what I say to people is, look, when you have an environment where it's concentrated in a few areas, you don't know what's going to take over next. So the advantage is, if you're in an index, you've captured those gains, right? Yeah. So you want to try not guess what's going to happen next, because the reality is we'll see rotation. And I would like to see either a broadening or rotation. We've seen periods where the Russell's done really well, which are the small cap stocks, but it doesn't seem to sustain because there are crosswinds that are happening.
Well, individuals have stayed out of the market and really until 2016, 2017. Are they going to come really back in, or is this volatility going to have them pull back, and we're going to have this?
We have almost 20,000 clients, most of them millionaires next door. And what we've seen with all of them is there was no panic at all with this 10% decline, which surprised me.
They're long-term thinkers.
Yeah, I think that, and also I think everyone understood this wasn't really the market. It was, if you looked, it was the SPY that really went down, which is used by institutions. Vanguard and BlackRock, they did fine. So what you saw was it was panic selling by institutions and really the quantitative traders that were getting out of this volatility trade.
You mean that's what you're accounting for the 1,000-point decline in the last couple of weeks?
Yeah.
Okay.
What would change it then if it won't be true forever? What are you worried about from here on out? I mean, obviously, we've talked all morning about rising interest rates and all those things that are out there.
Yeah, so for me, the micro story is really good. And we're going to see for months now all of the reinvesting of all this money coming back because earnings period's over, so now they can actually put their money to work. I'm much more concerned about the macro picture. So, you know, we have a runaway spending, again, with the repeat of the Bush policies of spending money we don't have. Ultimately, that's not good. You're seeing it reflected in the dollar. You're seeing it reflected in interest rates. And if interest rates go up, it's not so much that people won't invest in stocks. It's that it makes stocks more expensive in a relative sense. And that's my biggest concern that I see, is that if something happens and we end up having a slowdown later in the second half of the year, which is not unlikely, after all this money has been put to work, that could be a problem because we now don't have the money to put it back to work.
Yeah, well, we talk about that every morning. And there's a journal op-ed, Why America is Going Broke, Dagan. I feel like we could have written it. I mean, it's like that's all we talk about.
Well, concern about that, and even just a basic concern, something that Stephanie brought up, and Goldman Sachs has done the research too, that a sustained decline, Stephanie thinks of even, Pomboy, of even 10% wipes out the economic benefit of the tax cut. Which would be, Goldman Sachs puts it at more like 20%, but nevertheless, that does have an impact on wealth in this country and the wealth effect that the economy
I'm very much a fiscal conservative. I have no home because there's really no voice now for saying, you know, we've got to apply the same rules to the government that we apply as individuals. And individuals understand, I can't spend everything I'm going to have in the future. It has implications. Now, the good news is if you invest in emerging markets or in global stocks, they benefit from our dollar going down. They bring back their earnings now because of the tax rates at a highly appreciated value because of the dollar. Which is
why Mnuchin said it's good for trade.
It is. And it's good for stocks here in the U.S.
Well, it didn't have a very happy ending in the last decade when Bush weakened the dollar, the Bush administration weakened the dollar. That led to a false commodities boom, fueled the housing boom, and we saw what happened in 2008. What's to prevent that from happening again? Every time we had a sustained weakening of the dollar, it has a sad crashing end.
Well, because you create a bubble. You create an artificially inflated valuations. Now, we don't have the balance sheet issues we had then, but something will pop up. In the meantime, I think what you should expect with everything happening with the macro picture is that you're going to have increased volatility. As interest rates go up, as the Fed steps back, their biggest drive of what they did is drive up valuation for assets and drive down volatility, which means we've never in the history of the U.S. market had 400 days without a 5% decline.
Yeah.
It was the best of times,
But
and people need to get used to it a little
given
bit
the
more.
macro story is going to be better with earnings up 20%, economic growth of 3%, wouldn't the dollar go up on that?
It depends on what the Fed and the Treasury does.
Okay.
You can
Yeah,
have
of
a
course,
strong
it's about the
economy
Fed.
and wreck your currency, and vice versa. You can have a punk economy and still have a good currency.
And I think that's what you're seeing. I mean, that's what I get concerned about. We should be, with what's happening in the micro picture and what's happening with companies, we should be seeing the exact opposite of what we're seeing. We should be seeing a dollar strengthening. Interest rates going up should make the dollar more
You
attractive.
think it's the spending?
It's the spending.
Yeah, don't you think if Mnuchin, the Treasury Secretary, flagellated himself and said, oh, we want a strong and stable dollar and took actions to do that, that would actually be good for drawing money to the U.S.?
He showed his
he even
cards
needs to do
already,
the second
Steve.
thing. I don't think he even has to do anything. He just has to say it. I mean, you know, typically what they will say is enough.
Yeah.
Just at least put on a facade that you care about a
even
strong
when the
dollar.
policy's not there. Even
Well,
when the
that's the
policy's
thing.
we
I
saw
mean,
that in the 90s, right?
every administration says it before
Strong
this,
dollar.
but they don't really mean it. I mean, they say
the market knows certain words you say that a
He just
normal
was
person
honest.
would say, yeah, you want a stronger dollar. The markets know you really are fibbing.
Right.
His sin was
And
that he said
he
what
was
everyone
honest.
else-
Exactly.
Yeah.
That's right.
Yeah. Why?
Some honesty, but not too much honesty, please.
yeah, exactly. Joe, you're expecting a decline in this market, though.
I think we're going to see a 10 to 15% decline, probably in the fall, summer. I think there's too much backspin and too much support for what's happening in micro companies, too much money pouring back into stocks, companies buying back their own stocks. So I think we'll see the next decline will be a normal market decline. It won't be led by technicians. It'll be fundamentals that adjust. I still think we're in a bullish trend, and I don't think anyone should try to time it, by the way.
All right, we will leave it there. Thank you very much, Joe. Great to get your insights.
Great, thanks.
Joe Duran there.